Good morning. Thank you all for coming and finding your way through the rabbit warren of getting to this building on such a rainy day. We're glad to have you. I'm David Wessel. I'm director of the Hutchins Center on Fiscal and Monetary Policy at Brookings. Our mission is to improve the quality of fiscal and monetary policy and public understanding of it. We do not propose to be graded on performance, just on effort. And we take no responsibility for either the fiscal or the monetary policy of the United States government. But we're extremely glad to have with us Agustín Carstens, who's the governor of the Bank of Mexico, for at least three reasons. One is that Mexico is, in case you haven't noticed, a pretty big place, 120 million people, third largest trading partner after China and Canada for the US, sends 80% of its exports to the United States, a huge source of people for the United States, and a relationship that has waxed and waned over the years, but is central to the functioning of our North American economy and our political freedom. Governor Carstens has an extraordinarily interesting and long resume, which I will not read. He first went to work at the Bank of Mexico when he was 22 years old. He later earned a PhD at the University of Chicago, where as a former Little League star, he played first base and was a pitcher. He became a fan of the Chicago Cubs, so congratulations. It was a long wait, but it was worth it. Governor Carstens has been, among other things, an executive director at the IMF, deputy finance minister of Mexico, deputy managing director at the IMF, minister of finance in Mexico, chairman of the World Bank IMF Development Committee, governor of the Bank of Mexico, one of the finalists for the job of managing director of the IMF when Dominique Strauss-Kahn resigned, and is currently chairman of the International Monetary and Financial Committee, kind of the high-level oversight of the IMF. So we're glad to have him as a representative of Mexico, as one of the world's leading and most accomplished economic technocrats. Unlike some of other people in Washington, we see value in technocrats. But third, and in his jobs in Mexico, it's been a bit of a challenge, and that's prevented or delayed Governor Carstens from taking up his next role, an important one, as general manager of the Bank for International Settlements, a group really of, it's a place where the 60 leading central bankers of the world get together 6 times a year and have an unusual ability to have dialogue and to coordinate on international financial and economic issues without all the hoopla of the IMF and World Bank meetings, but perhaps more impact. Governor Carstens was supposed to go there on October 1st, but Mexico suffered what the governors called a hurricane. That would be Hurricane Donald. And that's led, he was so important to Mexico's stability that he's delayed his departure until December 1st. The governor's going to speak for some time, and he has some slides which we've posted on our website as well. There's people watching online, and we welcome them as well. After the governor speaks, I'm going to ask him some questions on stage, and then we'll have time for questions for all of you. So with that, Governor Carstens, welcome.
Well, thank you, David, very much for, first of all, for having invited me to this event. It's great to be here in an event organized by the Hutchins Center on Fiscal and Monetary Policy at Brookings. Well, of course, and thank you all of you for being here today. I would say that during the last several years, the discussion or the debate on monetary policy has centered, and I think rightly so, on the monetary policies applied by advanced economies. I mean, the term that they have been pursuing unconventional monetary policies, just the use of the word unconventional tells everything, that it's a real invitation for all of us to get dragged into that debate. And of course, that was the right thing to do by my colleagues because of the situation that the world faced after the global financial crisis really required a very decisive action by central banks. So for a while, emerging markets, we have been sort of a boring territory in terms of monetary policy. By and large, we all have been able to keep conventional, and hopefully we can continue doing that. But that has not been, that hasn't implied that there are not important challenges present, and some important debates have been appearing, and many of them have to do also with the influence of the rest of the world economy to the impact on emerging markets, and how should we respond from our own national perspective. Let me move to this slide. I would say that what most emerging markets do, not all of course, but most, we are, as a monetary framework, basically we follow what it's well known, it's inflation targeting schemes. Pretty much they all have the same characteristics. The key issue here is basically to say, this is my inflation target. Don't ask me a lot how I will get there, but I will get there, no? And of course, the real challenge is to build the credibility for markets to believe that you will get there, and you gain that credibility through your actions and delivering. And this has also been combined, and it has worked with pretty much floating exchange rate regimes. And here, basically, the idea with the floating exchange rate regime is that, in principle, you have monetary independence. So basically, the exchange rate is there to, more than anything, absorb shocks, no? And therefore, the real exchange rate becomes a very efficient shock absorber. And mostly and this works well when it is backed by a consistent macroeconomic framework. And a very important part of the macro framework is, of course, monetary policy, and monetary policy, therefore, is sort of is anchoring the nominal variables through inflation targeting. Now, from this combination of inflation targeting and a freely floating exchange rate, many researchers and observers have come to the conclusion that central banks, by and large, should not mind so much the development of exchange rates. Exchange rates, as I say, the floating exchange rate should pretty much have a role of shock absorber. Therefore, most movement in the exchange rate should be relative price changes. In that sense, there are once and for all adjustments in relative prices. And of course, you will not fall into what is inflation, which is a generalized and sustained increase in prices. But things are not simple as that, no? I mean, we would hope that that would be the case. I would say under normal conditions, it works that way. But in the world, we cannot say that we're living under normal conditions. As I say at the outset, there has been a lot of unconventional monetary policies out there. That has spillover effects into the rest of the economy. Obviously affects capital flows and so on. That affects exchange rate dynamics. And therefore, it also affects the considerations that goes into making a credible inflation targeting regime. Therefore, I mean, and some researchers, I would say, have said, well, if you mind too much the exchange rate dynamics operating under inflation targeting regime, you can become into an exchange rate targeter. And I think that is taking it too far. No? You still can remain, and I would say most central banks remain being an inflation targeter. But if the movement in the exchange rate is an important component into the price formation of your economy, you have to take into account the dynamics of the exchange rate. Some others say, well, if you mind too much the exchange rate, it might be that you're suffering from a syndrome which they have called the fear of free fall, which means that, you know, if the exchange rate moves a little bit, you might be expecting a real cataclysm. But that's also not the case, no? The argument goes also in the line that if you respond too much to the exchange rate through monetary policy, that might mean that your inflation targeting regime is not credible enough, which I also don't think is right. As a matter of fact, at some point, you have to react to exchange rate movements to make your inflation targeting regime credible. No? At the end of the day, the exchange rate measures the value, the relative value of your currency, and if you don't mind the value of your currency, it's also very, very, very important, very difficult not to anchor inflation. I mean, there are some large advanced economies that have gained through the years with a lot of credibility. They have very particular circumstances that many emerging markets do not share, and that allows them to pretty much disregard the impact of the exchange rate on their monetary policy making. But for most emerging markets, that's not the case, and mostly because we also have come, many of us have come from situations where we were subject for many years after the Bretton Woods arrangement on fixed exchange rate regimes, and most of us have made the transition to flexible or semi-flexible exchange rate regime in a way that not always has been easy or has been smooth. Therefore, I think that this is a very important difference between advanced and emerging market economies. So let me sort of go through the recent experience of Mexico just to show why the exchange rate plays an important role in monetary policy making, without this meaning that your inflation targeting regime is not credible, and at the same time without this meaning that you are an exchange rate targeter. And I also would say that this is an important debate because I would say, by and large, for many of the last years, the unconventional monetary policies applied by advanced economies, in a broad sense, have implied tailwinds for emerging markets, in the sense that the search for yield, capital allocation, I mean, precisely due to very low interest rates in advanced economies, have provided a lot of support to our exchange rates, and in a way has also helped us keep inflation low. But this might change in the future. I mean, this is not news for any in this room. And therefore, the changing in that environment will be very important in the years to come for for emerging market economies. Now, in this chart, I present to you the history of Mexico, recent history. Our inflation target is 3%, and I will focus in the last, from 2014 on. As you see, especially at the end of 2014, we had an important deviation. Let me be precise, it's 3% plus minus 1%. But what is important is that inflation declined substantially during 15, and then it started creeping up, and now it's really high. It's way above the ceiling of our interval. But what has called the attention of many analysts is the fact that we started raising interest rates when our inflation was pretty much at its lowest point, at least in the chart that I'm presenting. And that was in December of 2015, and that was when the Fed started increasing interest rates. So here, I mean, here's where many Banco de Mexico was criticized out. Why are you increasing interest rates when you have your lowest inflation? No? Now, of course, something that we know is that monetary policy doesn't have an immediate impact on inflation, and therefore you have to take into account the lag in which monetary policy operates, and therefore you have to anticipate yourself, and precisely what you are trying to do is to anchor expectations. So basically, the fact that the inflation has moved out of our interval has been the result of two major issues. One is the behavior of gasoline prices, which in Mexico they have a very important weight in our CPI, and the other is the behavior of the nominal exchange rate. Let me very quickly mention, do a comment about gasoline prices. For many, many years, or pretty much for the recent history in Mexico, gasoline prices were controlled by the government. That generates all types of problems from the point of view that it can deviate from international prices. In particular, you can see that during 2016, the fact that gasoline prices were fixed or even fall a little bit, that helped us with inflation, deviating substantially from international prices. So that was some form of repressed inflation. And finally, in January of this year, as part of all the structural reforms that Mexico has been conducting, the Mexican government decided to finally liberalize the price of gasoline. So, of course, there was a convergence to the relevant international reference. That clearly is a once and for all shock, and therefore that should not affect in the medium term the dynamics of inflation. Basically, we have to treat it as a relative price change. It's not a generalized increase in prices, and pretty much our role at the central bank is to prevent precisely that relative price change to be generalized. That, I think, has been achieved to a large extent, as I will show you, because you can see it very clearly in the behavior of inflation expectations. Now, you can see also that the peso has been depreciating quite a bit, and this obviously has been more dramatic since the result of the US election. Of course, there also has been a very important correction. So there is a sense of that there was an overshooting after the result of the US election was known. But it's important also to go very briefly to what determined the movement or the depreciation of the peso. And here, I should have marked this better in the graph, but I apologize for this. Basically, we have three main periods. One is the one that started at the end of 2014, which basically is when the price of oil went from above 100 to $40 per barrel. No, so that was a very important shock. That's terms of trade shock. That again, basically, there the real exchange rate has to depreciate when the terms of trade worsens, and therefore, again, monetary policy should sort of let it happen because it should not generate a generalized increase in prices. And that's pretty much what we did. Then the second important period, I would say, is the one at the end of 15, early 2016. There we have had two shocks at the same time. First was an additional very sharp decrease in the price of oil. It went all the way down to $18 a barrel. Of course, that started having some impact on the fiscal side. It required a very important fiscal adjustment, but also sort of diluted some of the animal spirits of the excitement about something that Mexico has been trying very hard to get, which was the energy reform. And at the same time, the Fed started the normalization of its monetary policy. And of course that, even though it has been very well handled, there was plenty of forward guidance that started to generate some portfolio adjustments. And at that time, precisely, of the combination of we having some form of repressed inflation through gasolines, with the price of oil falling, and at the same time with capital adjustments due to the increase in the federal funds rate, we decided that it was important for Banco de Mexico to send a signal that we cared about the value of our currency, and that was consistent with keeping nominal stability in the economy. And the third period is the one that I would say started pretty much at the mid of last year, which was when the election process was at full speed in the US, and where there was, of course, the fear about a result that could distort in an important way the bilateral relationship between the US and Mexico. And given that the US is the destination of 80% of our exports, that had the potential of affecting the Mexican economy. Once the result was known, as you can see in the chart, there was a very sharp depreciation. The peso went from around 1860, 1870 to around 22 pesos, and now we're back at the 1870 as a few minutes ago. Here, Eric can tell us where the peso is. Eric is from Bloomberg. So I mean, basically, there is a sense that there was an overshooting. Of course, Banco de Mexico responded to that, and more than anything, not to anchor per se the exchange rate, but to anchor inflationary expectations. So let me then go looking forward. Why the exchange rate is still important, especially keeping in mind that to conduct monetary policy, you have to react to the pressures that will come sometime in the future, precisely because of the lag in the transmission of monetary policy for it to work through the economy and at the end affect the dynamics of inflation. In this chart basically show what expectations have been doing, and we have expectations for different periods in time. We have the expectations for the end of 2017, and that's in the green light. From 2018 is the black line. Then we have for the next 3 to 8 years, and then we have the long-term expectations, which are basically derived from markets, which is taking the difference between CPI index bonds and 10-year bonds, and adjust through the inflation premium. And here you can see that basically we have a hump in expectations because the long-term expectations are in Banco de Mexico's range. They are not quite at 3%, but certainly are in the area between 3 and 4%. You see a slight upward trend, both in the long term, in the 3 to 8 years, in the 2018, but by and large, I think that we have been successful in stabilizing inflation expectations. Now, of course, it's important to see what is happening in 2017. And this can be seen here. Here, basically, what we do is, through surveys, we ask analysts what is the inflation expectations for the next 12 months. No, so it's sort of a rolling annual inflation expectations. And you can see here very clearly that the expectations jumped quite dramatically in January, when the gasoline price increases was known by the market. But then you see that at the beginning of next year, there is also a very sharp decrease in inflationary expectations. So basically, that means that the market really is thinking that this was a once and for all adjustment, and that subsequently it will not affect the dynamics of inflation. And that is very important for us because it tells us that it's a real relative price change, and the market, by and large, expect that not to contaminate the rest of price formation in Mexico. But then the other thing that is a little bit more well, it's an additional consideration that we have to take, is that we see how the expectations, and this is the expectations for 2017, how they increased from October to December, and there is the US election, and there is the behavior of the exchange rate. And then you see that for 2018, the expectation is 3.82. That's the very last figure there. So that means that the market is expecting for the gasoline price to basically vanish from the inflation dynamics, but still there is something there that where they don't feel quite comfortable, that will lead us to the convergence to 3%, which is basically our objective. So let's go through the main determinants of inflation and see forward if they are giving us signals that there might be some more inflationary pressures. Obviously, a very important determinant of inflation is the balance between observed and potential growth. And here basically we show that we will have probably a slightly negative output gap. Therefore, it's very unlikely that we will be facing inflationary pressures through aggregate demand. No? So that is not that's not probably that's something that we should not probably worry that much right now. Then the other factor that has been very important through time is the price of oil. The price of oil, of course, has fallen dramatically. It has recovered. There is a lot of volatility. Something that is quite remarkable is that the forward curve is quite flat. Now, the oil price basically works through the Mexican economy, and it can induce basic inflationary pressures if there is a feel that the fiscal position will be weakened, or if it might generate pressures on the current account. Now, something that is also quite remarkable is that the fiscal authority has made a very important fiscal adjustment. In this chart, you see how for this year, a quite sizable primary surplus is expected, and also for 2018. So it's the first time from 2009 to 2016 where we're moving back to primary surplus. So and also this implies that public debt as share of GDP will also start falling this year. So my sense is that fiscal policy and concerns about the fiscal position of Mexico is not a fact that is present there. Then you see the trade balance and the current account. Mexico became you can decompose the trade balance between oil and non-oil, and Mexico has become a deficit country in that balance because now we import more gasoline than when we export. Of course, that has pressured recently the current account, but the other thing which is important, and that's why the adjustment in the exchange rate is important, the decrease in the price of gas and this change in the balance between imports and exports in Mexico, that requires a real exchange depreciation. Why? To do what? Well, precisely to promote non-oil exports. And non-oil exports really have increased. And as you can see, we now have a surplus in non-oil exports, and that has kept the current account deficit in line. As a matter of fact, it has improved in the margin. So therefore, due precisely of allowing the market to, the exchange rate to do its work, we have managed to prevent the development of the price of oil to become a major issue in terms of generating problems in the long term or pressures in the long term in inflation. Now let's move to another source, potential source, which is the capital account portfolio adjustments, and how could that affect the nominal exchange rate. We all know that the Fed has started already the process of normalizing. If you graph the unemployment gap as they have defined it and the inflation gap, it tells you very, very clearly that it has started and it will continue. Markets are clearly expecting an upward adjustment in rates. So that potentially can affect the allocation of resources, portfolio allocation of resources. Now, one of the reasons why I think for Mexico this is not an issue, is that we have taken a lot of lead from the Fed. I mean, if you see here how our policy rate has been adjusted in relationship with the US, we have moved very, very quickly. We have really adjusted our interest rates very fast all to 2016 and 2017. And basically, this has meant that in a risk-adjusted basis, the interest rate differential is such that it has become very attractive to keep resources in Mexico. And as a matter of fact, this has been one of the, I think, one of the very important factors that has also stabilized the exchange rate, and through that also inflation expectations. Here in the right-hand side chart, you see how interest rate differential adjusted by risk with respect to other emerging markets have moved quite substantially in favor of Mexican assets. When your tightening is credible, what you expect is that the yield curve will basically flatten. You increase short-term rates, long-term, if it really is anchoring expectations, would remain the same or even fall. And that's what we see in this graph. The right-hand side, the left-hand side chart tells you, shows the development of rates at different levels, at different maturities. You see very clearly that even the 10-year rate has fallen more recently. Of course, in these rates, you can see the very sharp increase that they registered once there was the result, was known the result of the US election. And the other thing that is very, very interesting is that even the interest rate differential in the longer terms between US and Mexican assets have decreased, which means that there is quite a confidence in long-term assets in Mexico. There is confidence in the anchoring of inflation in the medium and long term. This has helped the performance of the peso vis-a-vis other emerging market currencies. Of course, after depreciating with respect to all the other for quite some years, the peso has depreciated very, very, very sharply. And part of that, it has been because we have kept the interest of foreign investors and local investors in our peso-denominated assets, as it is shown in the right-hand side chart. Now, going back to the issue, why inflation expectations are for 2018 especially are close to the top boundary of the margin that Banco de Mexico has defined, is because exchange rate expectations haven't really adjusted fully to the behavior of the market rate that we have seen. Here it's very, very interesting to see how, with respect to before the US election, the peso went above the expectations of the exchange rate, but there was the belief that it was going to return, no? And therefore, in the short term, it was expected that markets were jittery, and at some point it was going to appreciate again, because from a fundamental point of view, the peso was already undervalued. More recently, basically, expectations on the exchange rate have been, I would say, far more sticky. And there is the perception that the appreciation that we have seen might not hold. Of course, that's not our expectation from Central Banco de Mexico point of view. And I think that that's also why we have been acting through our exchange rate, and also by offering some hedge opportunities through non-deliverable forwards. But I think part of the reason is precisely because there is quite a lot of uncertainty in the market about important factors. One of it is how will be the bilateral relationship between Mexico and the US evolve. So far, I think that it has evolved quite favorably, and I certainly expect that to continue to be the case. And therefore, together with the conduct of fiscal policy, which has been strengthened, of monetary policy, which has been strengthened, and also the efforts to reach a mutually beneficial arrangement with the US, will finally make the expectations to converge to more clearly to where we consider to be an appropriate value of the peso. I mean, we still believe that the peso at this level is quite undervalued, and that is not reflecting fully the fundamentals of Mexico. So, of course, this is a factor that we will keep in mind in conducting monetary policy. Here in this fan chart, in the red, more intense red areas, you see the value of what our models are telling us, which is lower of where market expectations are. Therefore, we still have a little bit of convincing to do with the market that inflation will be well anchored. But I think that we have been taking all the necessary steps to anchor expectations. And I think that there is a very strong commitment of Banco de Mexico of reaching the 3% convergence. And we have been, in this task, we have been helped by a very supportive, very strong fiscal policy plus structural reforms. And we also have been seeing, a positive development in the discussions with the US. So to bring this back to my starting point, my final considerations is that for an inflation targeting regime, what is very important is to anchor inflation expectations. Exchange rate dynamics, as we have seen, can affect inflation expectations. Therefore, we cannot, as central bankers, disregard the dynamic of the exchange rate as you conduct monetary policy. Now, the fact that you are mindful of what the exchange rate is doing doesn't mean that you don't trust your inflation targeting regime, and it also doesn't mean that we are pursuing a specific level of the exchange rate. But something that the central bank, a signal that the central bank has to give, and I think is consistent with anchoring inflation, is that you mind and you really pay attention to the value of your currency. And there cannot be a divorce between both two variables, expected inflation and the value of your own currency. So with this, I finish. Thank you very much.
Thank you very much, Governor Carstens. I think you provided us with a very good window into how a central banker in Mexico makes decisions and how you weigh the challenges. I couldn't help but thinking how remarkable it was to be sitting here in 2017 and reflecting when I was a younger reporter in Washington in 1994 and what people were saying about Mexico and how far you've come in managing fiscal and monetary policies. In no small measure, I think your contribution to that is significant. So congratulations, and that's the only nice thing I'm going to say from here on in.
Good.
So you referred a number of times to the election of Donald Trump and the tensions in the relationship. You suggested that the hurricane has kind of abated. Where are the remaining uncertainties about this? Because as you pointed out, they will have a huge impact on trade and on the political climate.
Well, I mean, something that had remained silent had been left in peace for 23 years was precisely NAFTA. And suddenly it has been questioned. Now, something that has been left 23 years apiece, in 23 years that many things have happened, I think for sure justifies justifies that some of the parties might say, well, let's take a look again to that thing that has been with us for 23 years, especially in 23 years that many things have happened, no? I mean, the other day I was in a present, I was in the audience in a debate that Carla Hills, Jaime Serra, and Wilson from Canada had about negotiating NAFTA. And Jaime Serra was saying that, and just to illustrate how much things have changed since then, is that they would communicate his team with President Salinas through a fax machine. And so they would send the fax, and they also would have to call to see if they had received the fax. So you know, you can see how cumbersome communications were. Of course, now you know, we can communicate through email instantly and so on and so forth. I mean, just if you take into account the telecom reform, there has been major change. You take, for example, the energy sector. The energy sector was completely put aside in NAFTA. We have now a very important player in the world economy, which is China, that was not there in 1993 when NAFTA was finalized, which is China with as it joined WTO, joined globalization. It's a new player. So the position that Mexico has, and that's why I think that, and in a way slowly I think that this is what is being reflected, is that we look forward to the revision of NAFTA, especially because given the changes that have taken place in those 23 years, and those 23 years in which many things, as you said, you said your only kind words, but I think they're valued a lot, that a lot has changed in Mexico between 94 and today. That's why we believe that there is a win-win possibility in looking into NAFTA.
It seems to me that there's a tension here between, you're suggesting that if the administration decides we're not going to tear up NAFTA, but we're going to modify it. After all, Mexico has already made some concessions on NAFTA as part of the ill-fated TPP negotiations. So you could, that's if the technocrats can negotiate modifications to NAFTA that both sides agree with, we can all live happily ever after. But it seems to me there's, on the other side, there's the tension of the ever-present possibility that the President of the United States tweets something that disrupts things. And how do you prepare for that when you can see what effect that would have on the markets, on the peso, on confidence in Mexico, and in the bilateral relationship?
Well, I mean, you probably are better prepared to answer that than I do. I mean, I will
I think
not.
we've learned to ignore the tweets here, but I'm not sure that I'm not sure that the financial markets or the Mexicans are
No,
there
but
yet.
I think what you have to do is basically to look into to the trend, no? And the trend is positive. There is a constructive engagement between the two administrations, including Canada, I would say, and I think that is what is the core, no? And the core tells us that things are moving forward. Of course, there will be tensions in the process of renegotiating NAFTA, but if there is a constructive engagement as there is today, I think that will prove to be a win-win situation both for the U.S. and Mexico.
You spoke a little bit about the speed at which you've raised interest rates in Mexico, 3.25 percentage points since the beginning of 2016. The peso has returned almost to where it was before the elections in the United States. Do you see the end of the tightening cycle in Mexico? Are we near that?
Well, I mean, we had a sequence of adjustments that were steps of 50 basis points. More recently, we decreased it to 25 basis points. Now, of course, I cannot say what the what the board will do in subsequent meetings because first, I'm one of 5 votes, and they clearly can overrule me or whatever, overvote me. But at the end of the day, I mean, I think that we're happy with what we have achieved, but there are still some issues that needs to be taken care of. It's more, I would say, the gap between where we want to be and where we are has been decreasing.
And that's in inflation expectations and exchange rates. Because you said that the output gap is pretty much.
Yeah, so that certainly will play a role, and we will see. I mean, we're also data dependent, as many of my fellow central bankers to take their decisions.
Right. You spoke quite a bit about the inflation target regime, and I think you've made the case that it's been successful for Mexico. As you know, in the United States, there's occasionally some fear that setting a 2% inflation target, which made sense when they said it, may no longer be appropriate in an era in which we expect, to the extent that we know what to expect, the natural rate of interest, the rate that will prevail in normal times, to be very low. Inflation seems to be relatively low compared to history. So there's concern that 2% is too low for the U.S. What's your view on that? Do you think we made a mistake by setting such a low inflation target?
Well, I mean, I would be very patient about taking that decision, no? And about judging that. I mean, the 2% was establishing, thinking very long database going back in history and so on. Now, something that we economists learn in school is that after you have a very important shock, many of the parameters in your models change. I mean, it's basically what it was called the Lucas critique, and I'm from Chicago. I took classes with Robert Lucas, so I have that very clear in our mind. The U.S. has been under has suffered a tremendous shock, and basically, even going back to the terms that are used, we're in the process of normalizing it. So that means that the full cycle is not over. So I think that we need to wait until the end of the cycle to see if that 2% is the right figure or not. Of course, also the real rate of interest, which really makes a difference, is affected by other factors, demographic factors, saving patterns, fiscal policy. But what I would say is I would be very prudent, and probably I would wait more into probably a more advanced, having a more advanced situation in this monetary policy cycle.
Yes, that makes sense. So the effects, the spillover effects from U.S. monetary policy on emerging markets are much discussed and well documented. We had the famous taper tantrum. I think that the Fed has tried, and Stan Fisher spoke about this yesterday, to do everything they can in communication to minimize the spillovers of unanticipated moves, both in short-term rates, and they're clearly doing a lot of talking about the balance sheet. Do you think that they've done enough to minimize the risk of spillovers, or is that still more that they could do to take emerging markets into account as they make their decisions?
I'm very happy with what the Fed has been doing. As a matter of fact, I recognize, I do it here again, I recognize how they handled the adjustment in rates early this year. I mean, I think it was very well, I would say was very well handled, and certainly it went very, very smoothly in the market. So I don't have any complaints at all.
Wow. So there'll be one set of people in Washington that are happy today that you're here. No complaints about the Federal Reserve. A few years ago, and I think not so long ago, people tended to think of populism and nationalism as very much emerging market phenomenon, and that was clearly wrong. So I wonder, do you see some risk to the global economic order, to the institutions we've built, by the rise of populism and nationalism here in the UK and in Europe? Do you have any advice for the advanced economies about how to deal with this, given the experience you've had in Mexico?
What I would say is the following. After you have a very strong cataclysm, we have observed in the world economy since 2008 and 2009, there are many consequences, and many consequences that probably through the whole process take some time to build up and to become apparent. The other consideration I would say is that once you have a crisis in your hands, as policy makers, you tend to pay attention to the urgent and probably put in second place what is important. And I think that the combination of those two factors is what has made today be apparent a reality, where of course there has been some casualties from this cataclysm that has not probably been taken into account. And therefore, I think now with the benefit of hindsight, you would say, well, we probably should have taken care both of the urgent matters, which is to stabilize financial markets, to apply the appropriate monetary policy, to reform the financial system, to from a very macro point of view, get the economy going through fiscal policy. But then there are some distributional effects, some impacts on different sectors of the population that probably were not considered on a timely basis, and that now are being manifested in different margins, and that tells us very loudly that we should take care of them. But we have to take care of them in a way that doesn't destroy what you have achieved, and second, that is done in such a way that it doesn't destroy your capacity to increase potential GDP, no? So I mean, I think that there is an assignment, a very important assignment that is there for us, for many policymakers in many parts of the world, and that is to take care of those sectors of the population that has been affected. Of course, there are many other factors that are playing. There is this very, very important tendency of a technological process to play a very important role also in the structure of the economy. That by itself, under normal conditions, it would be difficult to handle the resource allocations and match the capacities of the population with what the reality of the world is demanding, no? And it's even more difficult to handle it when you are still stabilizing an economy after a major shock. So I think that yes, these are warning signs that we need to take very seriously.
So as you look ahead to taking over at the Bank for International Settlements, which has a very important role in international standard setting in banking and finance, you take over at a time when the rhetoric from the U.S. and from Europe is very much, very nationalistic, threatens to question the value of financial globalizations. Do you see a risk to the whole process, the international cooperation on financial regulation, the Basel III stuff from all this, and how do you address that in the context of so much upset about the distributional consequences?
Well, I mean, basically, I think what is very important, and I think there is a lot of benefits still to be reaped, is I think there is, I mean, there might be some aspects here and there where the reforms could be fine-tuned. And actually, many of them have more to do with the decisions that national authorities have taken that are I mean, basically, what the Basel agreements do is establish, let's say, a floor. Now, countries can deviate from that floor, no? I would say many of the concerns have more to do of what has been built on top of the Basel agreements. And now that is a domestic discussion that has to take place, no? But by and large, I think that I mean, we had a major crisis. We have a huge crisis. And therefore, the adjustments to the regulatory and supervisory framework, I think, are necessary and responsible. I think really the final step that we need to take is just to wrap it all up and in that way also eliminate, let's put it in this way, the regulatory uncertainty that many intermediaries still have. I think what the industry is demanding is just tell us what it is, no, and we will work with it, no, and I think that final step is something that we haven't been able to get, and I think that is something we should concentrate in the coming months.
How do you sell to angry voters in France and the UK and the US the virtues of Basel III type coordination done by unelected officials without clear legitimacy of treaties behind closed doors? That whole approach to governance seems to be under attack. How do you explain to people why it's in their interest, which I assume you believe it is?
Well, it's because in many of these countries they have seen the consequences of the crisis. Basically, the industry needs to be better regulated. And I think people, once you explain it to them, they understand it very, very, very clearly. I mean, also, I would say, And here we go back again at the populism. I mean, I think that the people on the street, they don't have the capacity, I would say, to say. I mean, I think if you ask somebody in the street what is Basel III, they don't even know where Basel is. I mean, in my family, when I say I'm going to Basel, they didn't even know in which country it was. You know. Far less if you're asking what Basel III is, they look
Right.
at you, what are you talking about? No? I mean, I think it is the combination of all the policy making and basically the capacity to generate growth and better distributed growth what I think is a real challenge that we face. No? But I think that what has been done in the regulatory environment, I think it has been sensible. Second, I think that it has a lot of merit because in a very short period of time, we managed to do a huge overhaul in the regulation and supervision of the international financial system that is needed. I think we would be seen in history tremendously responsible if after the magnitude of the crisis we faced, we didn't tighten the bolts at the financial sector, no? So I think that job is done. What we need to say is basically, we are done with it. Let's make the financial intermediaries do its job. And I think that also will manifest itself into better intermediation, more credit, and that will also, the population will start feeling it because financial intermediation will help economic activity.
We have time for a few questions. There's some mics, I think. There's a gentleman right here. If you could wait for the mic so the video can pick you up, tell us who you are, and try to keep your questions short because we only have a little bit of time left.
Sure. Guillermo Alborta, I'm an independent consultant for the IMF and World Bank and IDB. Going back to the issue of monetary policy and the experience of the central bank in Mexico, I would like you to hear your opinion and your probably brainstorming about currency swaps. You haven't touched the issue in your presentation, but certainly currency swaps becomes a kind of a way or instrument to anchor, let's say, to take your words, anchor expectations and foreign exchange rates.
Are you referring to the maneuvers that the Bank of Mexico did?
Yes.
Yeah.
I mean, you mean the hedging program that we offered? That we that
I see.
that
Okay.
part. Well, I mean, basically, we have moved in a direction of, let's say, enhancing our, I would say, our availability of resources, contingent availability of resources in Mexico, but we haven't done it through the avenue of currency swaps with other central banks, but we have been using, I would say, a very successful, a very appropriate program that the IMF is offering, which is a flexible credit line, which is basically the only program that the fund has available where it basically gives availability of resources to countries which are good performers. And Mexico has been a strong performer, and that's why the IMF has been given access to that instrument. That is $88 billion or 85 to it, depending on what the SDR is doing. But we have been doing use of that facility.
Gentleman over here. I think I'm going to take 2 or 3 questions and give the governor a chance to answer. Which one
Hi.
do you want?
So my name is Felipe Vallejo. I'm with ProMexico here in DC. And I don't know how familiarized are you with the cryptocurrencies, but I just wanted to ask, what are your thoughts on Bitcoin and Ethereum, all these cryptocurrencies? And the second question is, if you think that the governments should regulate this kind of
Okay. Thank you.
cryptocurrencies.
Gentleman here.
Anirban Paul, independent consultant, wanted to take off from your slide on non-oil exports. The implication was that as the Fed raises rates, peso drops, non-oil exports would go up, so it would probably be an export-led strategy. If you could compare and contrast that with further liberalization of the Mexican economy to allow foreign inflow into more sectors, which would be not non-export strategy.
Okay. Do we have one more? Okay, well, why don't you answer both those? Bitcoin
Sure.
and your export strategy.
Bitcoin, I mean, it's a reality. The cryptocurrencies are out there. Now, for them to really work at the end of the day, they would need, you need to have the ability to transform them into traditional currencies, no? And when you do that, you really have to regulate them, no? A financial innovation without a legal framework will not work. And I think that that's a challenge that we as financial authorities have for the near future, no? And now, with respect to your question, I mean, in a way, the non-oil exports have recovered, not as a response to the Fed policy, but precisely it was part, I mentioned it in the context of a terms of trade shock that we received in the oil sector. The decrease in the price of oil is what generated the adjustment in the exchange rate, and that is what has, by and large, generated the recovery of non-oil exports. So it's a real phenomenon. It's not tied to the Fed action.
Okay. With that, please, Harriet, do you have one last question?
Hi, Harriet Torrey with the Wall Street Journal. I just wanted to ask another question about the exchange rate. We saw earlier this week that the peso took quite a hit from comments that Trump made about NAFTA, and you did discuss that briefly in your remarks, but I just wanted to ask you if there are any other risks to the peso that you see ahead.
What are the risks to the peso other than Donald Trump?
Well, first of all, I mean, the peso adjustment took place in the context of a very, very sharp appreciation. It's very difficult to point out exactly what the market correction is the result of. I mean, in general, I mean, this week we saw yesterday the price of oil fell over 2%, so certainly that contributed to. And there is some form of, I would say, a generalized uncertainty about, for example, the French elections that are this weekend. So I wouldn't point I wouldn't point necessarily the adjustment to the comments made by President Trump. I mean, I would put more than anything that the main challenge for us, and that's what we're working very hard, is that we are I would finish with this. I mean, we're in a period of heightened uncertainty, and what is the responsibility then of authorities, including Banco de Mexico, is to reduce the uncertainty from our side. We have to have a predictable, credible monetary policy, which I think we have. We need to have also credible fiscal policy that I think that we have. And we have to move towards stimulating the economy mostly through structural changes. And the fact that the Mexican government keeps moving forward structural reforms is another very important element that should anchor the expectations in Mexico. So that is our challenges, and that should reflect into a strong, into stable peso.
Thank you very much. Please join me in thanking the governor.